Thank you for watching this Forex Preview here at XM.com. We'll be having a look at the Bank of England policy meeting coming up on Thursday. I'm Christina Marujos. With me today is lead investment analyst Rafi Boyajian. Now, the Bank of England meets this week, Rafi, with markets essentially considering a rate hike a done deal. However, it looks like the most crucial topic at this meeting will be whether policymakers decide to also shrink their balance sheet. Therefore, what are we likely to see at this meeting?
Well, Christina, that is right. The rate hike is seen as pretty much a done deal. We already had, of course, that surprise rate hike back in December, and this is probably likely going to be one of many rate increases this year. But given that, as you said, it's pretty much been priced in by the market, the focus for investors is really on what they're going to decide about the balance sheet reduction. So most likely they will decide to stop reinvesting in maturing bonds. So that will allow the balance sheet to gradually shrink over time. And this additional step would be seen necessary given that inflation has surged quite a bit lately in the UK. It hit 5.4% in December. That was the highest in nearly 30 years. And there could be more increases to come in terms of inflation, potentially see inflation hitting 6 or 7% like it has in the US, because energy bills are set to soar as of April, because up until now, the increases on energy prices had been limited due to a price cap that they have in the UK. That price cap will be lifted to a much higher level as of April. The main concern here is that although inflation is a real worry for policymakers, there are some doubts about the growth outlook, because there's also going to be an increase in taxes, in national insurance contributions as of April. And given the overall cost of living rise in the UK, that could hit household consumption. So perhaps, policymakers might decide to play it a bit safe, maybe sound a little bit cautious about the outlook. So there is that risk on the whole, though, given that overall policymakers have been sounding rather hawkish in their most recent remarks. Most likely they're not going to be worried about growth right now. They're going to be focusing on inflation. And so there's also a risk that they might announce something more aggressive in terms of quantitative tightening, and that would be the outright sale of government bonds. So rather than just allowing them to mature and not reinvest, they will also be selling in the bond market their holdings of government bonds, and that would be seen much more aggressive. So that's something to watch out for.
And now, taking all of this into account, what would that mean for the pound?
Well, the pound is bouncing higher at the moment. It has eased off quite a bit from its January high, but given that the dollar is seeing a bit of a pullback right now, so should the bank come across as more hawkish than expected on Thursday, that could provide a notable boost for sterling. So overall from the meeting, there's two risks that investors should be wary about. So the one is on the balance sheet that we were talking about. So either if they decide to bring down the balance sheet more quickly, or they signal their intention to do so. So Governor Bailey might signal in his press conference that even if they're not going to start the sale of assets right now, they might do so in the future. So that could send UK government bond yields surging, lifting the pound. The other risk is from the bank's quarterly forecast, which will be published on the same day. So it's going to be interesting to see whether the bank's own projections about inflation and the rate path will be consistent with the market implied path. And so if there's any deviation there between the two, that could spark a bit of volatility. So again, there's two-way risk, because on the one hand, policymakers do have reason to be cautious in terms of going ahead with additional rate hikes. On the other hand, they might, really be focusing on inflation and not worrying about growth right now. And so there's also risk that they might think that even more rate hikes might be needed than what the markets have priced in.
Rafi, thank you for joining me today, and thank you for watching this Forex Preview here at XM.com.